Okay, this meeting has started recording. As I have told you, for this term in FSAN MFI or FinFSAN, depending on what batch of what batch of students you belong to, we are going to discuss financial statement analysis in the context of financial institutions. For this session, financial statement analysis for banks. Financial statement analysis for banks. So the first question that I would like to pose to introduce this topic is, why do banks exist? Let's take one step backward and talk about the purpose of banks. And then we proceed to financial statement analysis. In an ideal world, there should be what we call a capital allocation process. Those who have excess funds should be able to funnel those funds to those who need the funds. Say, for example, person A has a lot of money, but person A doesn't know what to do with the money. Marami siyang pera, hindi niya alam kung anong gagawin sa pera na yon. Person A has a lot of money, but person A doesn't know what to do with the money. Okay? Person B has no money, but person B has lots of ideas on what to do with the money. Person B has a lot of business ideas. So in an ideal world, the funds should find their way from person A to person B. Person A who has excess funds with no idea should be able to bring those funds to person B. Someone who do not have the money but has the ideas on what to do with the money. Of course, with a compensation to be provided to A in the form of share in the profits as well as interest. Again, we call this capital allocation process. We call this the capital allocation process. Okay? So again, the first question would be, why do banks exist? In an ideal world, those who have excess funds, the funds should find their way to those who need the funds. People who have a lot of money but do not know what to do with it, the money should find their way to people who do not have the money but know what to do with it. Buy a new house, open an innovative business, etc. We call this the capital allocation process. Funds should find their way from those who have access to those who need it. Okay? However, there is a problem. Number one, there is information asymmetry. There is information asymmetry. Availability of info is not the same for the transacting parties. So, between person A and person B knows him or herself whether he or she is capable of managing the money. But person A might have a trust issue because person A doesn't know whether person B can manage the money. Okay? Information asymmetry. Availability of info is not the same for the transacting parties. This can lead to two things. This can lead to, number one, adverse selection. Number two, moral hazard. Let me repeat. In the capital allocation process, ideally, those who have excess funds, the money will come from them, person A, to those who need the funds because they know what to do with the money, person B. Okay? The problem is, person B knows him or herself more than person A knows him or her. Okay? Person B has an idea whether he or she knows how to manage the money. Person A doesn't know who person B really is. The existence of this information asymmetry, meaning the information is not the same for the transacting parties, can lead to two things. Number one is adverse selection. Number two is moral hazard. Okay? This can lead to adverse selection and or moral hazard. Adverse selection. Let me discuss the details of adverse selection. Adverse selection is a situation where undesirable results occur because two parties in the transaction have asymmetric info, meaning it happens before the transaction. Okay? Can anyone give me an example of adverse selection? Undesirable results occur because two parties in the transaction, they have asymmetric info, meaning one party doesn't know the other that much. Or when we talk about buying and selling the products that much. Okay, we have a message here. So, sorry, akala ko message. May lumabas, okay. So, can anyone give me an example of adverse selection? Can anyone give me an example of adverse selection? In
Sir,
any context. Yes,
may I
Miss
try
Lisa.
po?
Yes.
Opo.
Jamabel.
An example po of an adverse selection may be if yung isang individual po yun has a bad past regarding bank loans or bankruptcy po. And hindi niya po din-disclose to the other entity or other individual po.
Okay, very good.
Nakatransact.
Okay, thank you. Very good. That's the exact example that I'm going to talk about later. So thank you, Ms. Bautista. That is an example of adverse selection. Okay? Before I go there, I would like to mention one example. In business, the managers of the business know lang, no? Managers of the business know the potential returns and risks of the investments. The outside shareholders or the investors, they do not. So the investors, they put their money in the company, not knowing exactly the returns and risks of the business, but the managers, they know more about it. Okay? And that's an example of adverse selection. So the shareholders will provide the money to the business, and the business will hire these managers. These managers have more knowledge, more information about the potential return and risk of the investments. Meanwhile, the investors who provided the funds, they do not. Going to the example of Ms. Bautista, lending, borrowers know their ability to pay a loan. Borrowers know their ability to pay a loan, whether they can pay the proposed amount or not, whether they can repay the proposed amount or not. Now, lenders do not know them. Lenders do not know them. This is what we call adverse selection. This is what we call adverse selection. Again, the borrowers, they know their limits. They know their ability to pay a loan. Mangungutang sila ng 5 million pesos. Alam ng borrowers kung kaya nilang bayaran o hindi. Alam ng borrowers kung kaya nilang bayaran o hindi. Meanwhile, sina lenders, they do not know the ability of the borrower. Now, what can we do in order to deal with the problem of adverse selection? Remember that adverse selection happens before the transaction. So before a transaction would be entered into, these are the possible solutions to adverse selection. Number one, there should be information collection. Information collection. Okay? There should be a database where okay? The banks would collect information about potential borrowers. Okay? So information collection. Okay? Information collection. So, example, rating agency. Kilala nyo naman mga Moody's, Standards and Poor. They rate the bonds of the company and the company themselves based on their ability to pay. Okay? The problem with information collection is there's a free rider problem. If the information will be made public, if the information will be made public, collected by a particular lender, kawawa yung lender na yon. Dahil siya yung nag-collect ng info, tapos makikinabang yung iba't ibang lender. Okay? If there are three lenders in the world, lender 1, lender 2, and lender 3, if it is lender 2 who collected the info and made available to everyone, lender 1 and lender 3 would be free riders. They would be free riders. Okay? So, kung pupunta kayo sa States, yung mga tao, alam yung credit score nila. No? Credit score. So, kung maganda yung credit score, madaling makautang. Okay? The solutions to adverse selection is number 1, information collection. The lenders should collect about information about the borrowers or potential borrowers. The problem with information collection is that if it is made public, there is what we call a free rider problem. What do we mean by free rider problem? Yung mga ibang lender makikinabang sa pinaghirapan ng isang lender. Ay, alam mo ba na hindi nagbabayad to? Tapos sinabi mo sa ibang lender. E di mangyayari dyan, nakinabang yung ibang lender. Hindi naman sila nag-effort. Number 2, there can be government-required disclosures. Government-required disclosures like the annual report and financial statements. Okay? If financial statements are made available, at least the cost of preparing the financial statements would be made by the borrower. Okay? We call this government-required disclosures. Okay? Government-required disclosures. So, annual report, financial statements. These are examples of government-required disclosures. Okay ba? Okay. So, kapag may financial statement, makapag-conduct tayo ng financial statement analysis. Alam niyo naman yung liquidity ratios, solvency ratios. Liquidity and solvency ratios, they indicate the ability. They indicate the ability of the company to pay debts. For liquidity in the short term, solvency in the long term. More on that next time. Okay? Also, a solution to adverse selection is screening. So, when a borrower would apply for a loan, the borrower should be able to pass some form of screening. Okay? Screening like an interview and other information. This is what we call adverse selection. Adverse selection happens before the transaction. Before the transaction. Okay? In the context of our discussion, this is about lending, borrowing relationship. The borrower knows him or herself whether he or she can pay the amount, but the lender doesn't know. So, will the lender give the money to the borrower? Will the lender provide those funds to the borrower? So, that is the issue. Another problem with information asymmetry is moral hazard. Problem number 2, under information asymmetry is what we call the moral hazard. Moral hazard is a situation where one party takes an excessive amount of risk or reckless behavior because it knows another will bear the burden of such. Unlike adverse selection, moral hazard happens after the transaction. Moral hazard happens after the transaction. Okay? So, in the context of business or in the context of borrower-lender relationship, can anyone provide another example? Can anyone provide an example on this?
Sir, may I try po, sir?
Mr. Shi? Okay,
Yes,
you
sir.
may.
An example would be like stuntsman, sir. After they, like, let's say after they get insured by the insurance company, they would perform extreme stunts. So even if when they get injured, they'll be insured by the insurance company, sir.
Okay, thank you, Mr. Shi. That is a good example of moral hazard. So for example, in the case of stuntman, pero yung stuntman, pwedeng before, mild stunts lang yung ginagawa niya. Prior to the insurance coverage, maybe the stuntman would not enter into risky stance. But after the transaction, the stanceman would enter into such. Okay? Or kahit sa inyo, no? Siguro meron sa inyo nagbabalak na mag-skydiving, no? So, ang mangyayari, kukuha muna kayo ng insurance, no? Kukuha kayo ng insurance bago kayo mag-skydiving, bago kayo mag-scuba diving, no? Bago kayo pumunta sa mga extreme activities. Okay? Anything, para sa akin naman, yung mga bungee jumping, that would be considered extreme because hindi ko kaya, no? Anything after zipline for me is already extreme. So maybe you're going to enter into an insurance contract, tapos after the insurance contract, you would go into extreme activities. Okay? That's moral hazard. Unlike adverse selection, which happens before the transaction, moral hazard happens after the transaction. So the examples that I prepared: business, investors, especially shareholders, they prefer to take in risky project upon borrowing funds from lenders, the bondholders. So the investors here will tell the managers of the company, okay, pasok tayo sa mga risky na project. Total, yung pera, hiniram naman natin. Kung wala tayong pambayad, okay lang. Kung wala tayong pambayad, okay lang. E di bankrupt yung company. Okay? Kung kumita naman tayo, tiba-tiba yung kita natin. So, investors and shareholders, they really like to take a lot of risk because when there are a lot of risks, usually there are a lot of cases that risk is accompanied by higher returns. Okay? The riskier, the higher the returns are. So if you will have high risk, the investors will feel more returns. But if it didn't work well, the money came from the bondholders. Investors or shareholders prefer to take in risky project upon borrowing funds from the lenders, the bondholders. In lending to a particular person, to an individual, borrowers gamble away the money lent by the lenders. Okay? Yung mga manghihiram, responsableng tao sila nung una, no? The borrowers originally, they are responsible with their own money. But after borrowing, they feel that anyway it is not their money. Hindi naman daw pera nila. They would just gamble away the money lent by the lenders. Okay? So, what are the solutions to moral hazard? The solutions to moral hazard should have something to do with assigning terms in the contract. Example, if the lenders are banks, they require a compensating balance. If we're talking about lenders being banks, the banks would put what we call compensating balance. A compensating balance is open in a bank account so that when you fail to pay, at least they have a portion of the amount. Hindi nila ibibigay sa'yo yung amount na iniwan mo. Say if you borrowed 1 million, they would require that 100,000 should be in the bank so that when the time comes that you cannot pay, they're going to take away the money from the compensating balance. Okay? So, after the transaction, these are things that would protect the lender. Another would be restrictive covenants. Restrictive covenants are those terms or clauses in the bond contract that prevent the shareholders or investors from taking some action that would endanger the money of the bondholders, that would put the money into more risk. So, sasabihin sa restrictive covenant, the shareholders of the company, they cannot make a decision that would invest in a project that would give high risk to the company's survival. Okay? Those are examples of solutions to moral hazards. So, ano yung mga pwede nating maiwas? Ano yung mga pwede nating gawin? Ano yung pwede natin ilagay sa kontrata para hindi naman maging irresponsible yung borrower. Compensating balance, an amount of the borrowed amount should be left in the bank. Restrictive covenants, terms and clauses in the contract that prevent the shareholder from taking in more risk. Okay? So, knowing this information that I've just discussed, knowing more about adverse selection and moral hazard, you would question yourself. Gusto nyo pa ba maging lender? Would you want to be a lender? Di ba mahirap na? For an ordinary person, for an individual like us, okay, for individuals like us, we do not know a lot of people, a lot of potential borrowers coming into coming to us in order to borrow. Kung may mga tao na humihingi ng utang, more likely we would say no, okay? Unless it's a very special case. When people borrow from us, we generally say no because of adverse selection and moral hazard. Especially if we do not know the person. Adverse selection and moral hazard. Of course, hindi nyo inisip yung words na adverse selection tsaka moral hazard, no? But the principle, I know you are thinking about them. Ay, hindi ko to kilala. Paano kung hindi to nagbabayad? Ay, paano kung nagbabayad to? Pero kapag nangutang na, magwawalwal na. Okay? So, those are the principles of adverse selection and moral hazard. Knowing this information, lenders are hesitant to lending to other borrowers. This is the reason why special institutions are created in order to do the lending. Sinong magpapautang? Okay, that is why banks exist. This is the very reason why banks exist. Because for a typical individual or a typical company, it is irresponsible. It is irresponsible to simply lend money to someone we do not know. So why do banks exist? The real world, as I have told you, those who have excess funds, really, the capital allocation process should happen. Money will flow from those who have excess funds to those who need those funds. The real world, it needs an intermediary. In a real world, it needs an intermediary. Dapat merong partido sa gitna ni person A tsaka ni person B. Okay? So that is why banks exist. Okay? That's the reason why banks exist. Banks take the deposit from parties with excess funds. So kung marami kayong pera, ilagay nyo sa bangko. Yung bangko magbibigay ng barya-baryang interest. Pero pwede na rin. Better than zero, of course. And on the other side, the banks would give those loans to the parties who need the funds. So banks are in the middle of person A and person B. Banks will take the deposits from person A, the parties with excess funds, and banks would give loans to those parties who needs the funds, person B. Si person A, may hihirapan magpautang kay person B. Bakit? Information asymmetry. Hindi niya alam si person B in the same way na si person B kilala niya sarili niya. Nagkakaroon ng adverse selection, nagkakaroon ng moral hazard. So what person A can do is to deposit the money to the banks. Okay? The banks should pay interest to person A. And then person B may take a loan from the bank and person B would pay the returns to the bank itself. In theory, these deposits should earn interest. But in practice, the interest is below the inflation rate. Okay? So that's the reason why banks exist. Okay? That's the reason why banks exist. Those are the reasons why banks exist. Those are the reasons why banks exist. Now, there is a third reason. Why banks exist. And very few people know this. Can anyone tell me what the third function of banks, uh, what the third function of banks is?
Sir?
Okay, Miss Dizon. Oh, Miss Dizon,
Sir, banks create value,
create value. What kind of value?
monetary value.
What do we mean by that?
They create money po. Like
They create money.
even if you don't see that you have money in your hands, they have the power to give value to something that you don't see.
Okay, actually, what happens is yeah, that's true. The third function is the banks they create. Sorry, bank takes deposit. This should be singular. No? So banks create money. Yeah, that's correct. But unfortunately, they create money out of nowhere, meaning without value. Okay? Banks create money. Banks create money without any value. That's the problem. But yeah, the third function of banks is that banks do create money out of nothing. I repeat, banks create money out of nothing. So, how do banks create money? How do banks create money? Very few people know this, but the fact is, banks are very powerful because they themselves create money. Okay? Banks create money through what we call the fractional reserve banking system. Banks create money through the fractional reserves banking system. Okay? In a fractional reserve banking system, we have what we call a reserve requirement. In this illustration, I am going to I am going to assume the reserve requirement is 10%. Okay? So in this example that I'm going to do, I'm going to give the reserve requirement ratio is 10%. And let's assume an initial deposit of 100 pesos. Okay? So, do banks create money? The answer is yes. Okay? Why don't we why do a lot of people not know about this fact? It is because it is not obvious. I would like to spend some time explaining how banks create money. Okay? How banks create money. Okay naman ang foundation niya sa balance sheet dito? Okay. I hope everybody has a good foundation in what a balance sheet is. Okay? Marami ba dito galing accounting? Okay, maraming galing accounting, no? So lumipat sa course na to. So, example ha, Bank A. Bank A balance sheet. Okay? Bank A balance sheet. What do you find in the left side of the balance sheet? Left side of the balance sheet, that would be assets, right? In the right side, liabilities and equity. Pagdating sa bangko, yung loans, yun yung asset nila. Because the bank is the lender, it is a loans receivable. Loans receivable are their assets. And then the deposits, from the point of view of the person, the deposits is their money, their asset. But for the bank is basically borrowing the money from the depositor. Okay? Actually, the contract relationship between depositor and bank is one of lender-borrower relationship. Okay? The, the depositor is actually a lender to the bank being the borrower. Okay. Now, let us assume here, this person, I'll call him Mr. Shi. No? Okay, Mr. Shi, Mr. Shi is going to deposit to the bank. And in this economy, the government requires a reserve requirement of 10%. The government requires a reserve requirement of 10%. If Mr. Shi will give an initial deposit of 100 pesos, what is the entry to the bank? What is the journal entry? Journal entry from the point of view of the bank. Anyone? Anong journal entry? Debit? Anyone?
Debit cash, sir.
Miss Shi. Okay, may Miss Shi pala dito, no? So, Miss Shi, debit, cash, credit?
Accounts payable.
Okay. So, yung tinuro sa inyo, tama yun, no? Debit, cash, credit, accounts payable. But for banks, they call cash reserves, no? They call cash reserves. If you're talking about money, cash, and the bank receives money, they call cash reserves. That will be explained sometime in the future. But basically, reserves is an asset account. It's a technical term for cash. Okay, there's a reason why it's called reserves, but for now, think of it as cash. Debit cash, which is reserves, 100. Credit, rather than accounts payable, we call it deposit liabilities. Okay, deposit liabilities. So very good, Miss Shi. In essence, tama naman yun, no? It's just the terms. Debit reserves, credit deposit. So if this is the only transaction that had happened, ito lang yung transaction na nangyari. Can anyone tell me how much cash is there in the economy? How much cash is there in the economy? Magkano ngayon yung cash ekonomiya? Anyone? You can give a smart guess. Magkano ang cash sa ekonomiya? Hello? Okay. Does anyone want to answer? Magkano yung cash ngayon sa ekonomiya?
200, sir.
Mr. Zape? Zape? Okay.
Zape po,
So,
Zape.
Mr. Zape. Okay. So, hindi naman 200, no? So far, yeah, I know what your point, no? Pero we're going to get there to 200. But the answer is not 200 yet. Okay? I'll explain later. So, I know you got the point, no? Deposits, 100. Mr. Shi, if this is Mr. Shi, can claim that he has money deposited in the bank amounting to 100. Now, what Bank A can do is to lend the money given by Mr. Shi. Nakuha nyo? Nagbigay si Mr. Shi ng pera sa bangko. Yung bangko, pwede niyang pautangin yung pera ni Mr. Shi. This is where the reserve requirement ratio comes in. In this example, the reserve requirement is 10%. Reserve requirement ratio is 10%. What the bank can do, if there is a new borrower, this is Miss Bautista, no? Miss Bautista comes in. So Miss Bautista is going to borrow from the bank. The maximum amount that Miss Bautista can borrow would be 100 minus 10%. Okay? It will only be 90. It will only be 90. So debit, loans receivable 90, then credit it from the reserves. Credit, cash, or reserves, 90. So yung naiwan na reserves, 10 na lang. Naiwan na reserves, 10 na lang. So Miss Bautista can borrow from Bank A a maximum amount of 90. Now, assuming that Miss Bautista did borrow 90, how much cash is there in the economy? Magkano na yung cash sa ekonomiya na to? Anyone? Magkano yung cash sa ekonomiya na ito?
190.
Okay. Very good, Mr. Zape. Now, 190 na yung pera sa ekonomiya. Nakita nyo, yung deposit ni Mr. Shi na 100, naging 190 yung total sa buong ekonomiya. Because Bank A can create 90 pesos out of the 100 deposited by Mr. Shi. As far as Mr. Shi is concerned, The deposit of 100 is his cash. As far as Miss Bautista is concerned, naghiram siya ng 90. So the bank has a loan receivable of 90. Meron siyang 90 pesos. Here's the problem. It doesn't end there. It doesn't end there. Okay? Assuming there is bank B here, bank boy, B for boy, bank B, and we have here a balance sheet. Miss Bautista can actually go to bank B. Okay? Miss Bautista can go to bank B, and out of the money borrowed, she can deposit it in bank B. Magkano i-deposit niya? Yung hiniram niyang 90. Okay? Now, if the bank will take in the 90 pesos, debit reserves, credit deposit liabilities, 90 pesos each. Another borrower comes in. So let's call her Miss She, borrowing from bank B. So with a 10% reserve requirement, the bank can lend a maximum of 81. Debit loans receivable 81. Credit the reserves 81. Ang may iwan 9. Okay? So 100 naging 190. Yung 90 pinasok dito. Yung 90 nagkaroon ng anak na 81. Okay? Does it end here? Does it end here? Okay. So, kung nagigets niyo yung kwento, saan pupunta si Miss She? Where will Miss She go?
Bank C, sir.
Okay, very good, no? Bank C. So, Miss She will go to Bank C and deposit her money. Okay. The next borrower, magkano yung pwede niyang utangin?
10% of 81, sir.
Okay, the 90%, no? 90%. Yung 10%, yun yung reserve
90%
requirement. Yung 90% niyan, 90% of 81 is 72.9, may iwan 8.1 sa bank C. This cycle can go on and on and on, leading to an unlimited supply of money. Okay? As you can see, banks have the power to create money. Banks have the power to create money. Okay? So, my piece of advice to you is, except for emergency funds, never put your money as cash in the bank. Why? Because the bank will simply use it to create more money. If you put cash in the bank will create more cash. Wala namang problema kung makikinabang yung bangko. Ang problema, kung gumagawa sila ng mas maraming cash, okay, higher supply, there will be lower value, there would be higher inflation. Okay? Magmamahal yung produkto. Okay? So, this is how banks create money. This is not part of your basic education in your elementary, in your high school, but it is in my opinion that everybody should be aware of this. Okay? May nakita ba kayong bangko na malaki na nababankrupt? Kung nakita nyo, yung mga malalaking bangko, hindi na nababankrupt. Okay? Because they have the power to create money. Siyempre, kung maliliit na bangko, they can still fall. But once they reach a certain limit, certain number of branches, they are already unstoppable. No? So, that is the problem. Banks create money out of thin air. So 100 plus 90 plus 81 to be followed by 72.9. Okay, that's the problem. So, will this ever end? If so, when? We have the multiplier formula here. The multiplier is 1 over the reserve requirement ratio. Yung 100 pesos, magkano yung magiging total money supply? The multiplier is 1 over the reserve requirement ratio. If the reserve requirement ratio is 10%, 1 over 10%, 1 over 10%, the multiplier is 10 times. Yung 100, magiging 1,000. So if a person would deposit money in the bank, assuming the reserve requirement ratio is 10%, okay, assuming the reserve requirement ratio is 10%, that money will become 10 times larger. 1 over 10% is times 10. Okay? 10 times. Yung 100 magiging 1,000. So kung ituloy-tuloy nyo ito, dot, 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 this will end. At the end of this, you would be able to create a total of 1,000. 100 becomes 1,000. So what's the reserve requirement ratio? What's the reserve requirement ratio? The lower the reserve requirement ratio, the more powerful banks become. 1 over 50%, the multiplier is only 2 times. 1 over 10%, the multiplier is 10 times. Okay? The lower the reserve requirement ratio is, the more banks can create money. Mas kayang gumawa o bumuo ng mas maraming pera yung bangko kapag mas mababa yung reserve requirement ratio. Now, when I started teaching this subject not too long ago, no? Hindi pa umabot ng 5 years. The reserve requirement ratio was 20%, bumaba sa 19%. So nung nagturo na ako, I think it's 20% or 19%. But here's the problem. Just last year, this is already a year ago, March 24, 2020. March 24, 2020. Philippines, to cut bank's reserve ratio by 200 basic points, Diokno, our central bank governor, says. So according to Bloomberg Economics, a year ago, Philippines to cut bank's reserve ratio by 200 basis points, Diokno says. So the starting point was actually 14%. 14% na yung bago yung nangyari to. It was 14. 14 minus 2%. 200 basis points is 2%. 14 minus 2, naging 12. No? Again, not too long ago, less than 5 years ago, it was just 20%, 19%. But now, banks are essentially becoming more powerful and inflation is becoming more inevitable. Okay? I even expect a double-digit inflation by the end of the year. Okay, I would expect around 10% inflation. Yung mga bagay na binibili natin, it will become more pricey by 10%. So according to the news, President Rodrigo Duterte in mid-March, okay, locked down the island of Luzon. Hindi pa ito yung buong Pilipinas, no? So last year, no? Akala natin papasok pa tayo, di ba? Locked down the island of Luzon, the engine of the Philippine economy, to try to stop the spread of coronavirus. Okay? Early Tuesday, the legislature granted Duterte extraordinary powers to fight the pandemic, including the ability to refocus funds from the year's 4.1 trillion peso, that's 80 billion budget in peso, in dollars, $80 billion budget, and direct the operations of businesses like hospitals if necessary. So this happened 1 year ago already, no? And still we are here. So hindi natin in-expect, no, na ganito katagal to. Tuesday's announcement from the central bank to lower the bank's reserve ratio to 12%, kasi at that time 14 na, will take effect on March 30, Jokno said. This is good news and what everybody is waiting for, said Robert Ramos, Chief Investment Officer at East West Banking Corp in Manila. So, sino ang nagsalita? Yung Chief Investment Officer, East West Banking Corp. Anong sabi niya? This is good news and what everybody is waiting for. By everybody, meaning every bank, no? Wala naman tayo naintindihan, no? Prior to my explanation, naintindihan niyo ba kung anong sinabi dito? No? But Mr. Robert Ramos, I do not know him, no? Maybe he's a good guy. Chief Investment Officer is claiming that everybody is waiting for this. But the truth is, this is beneficial for banks' ability to create more money. This is good news and what everybody is waiting for. Okay? The markets will take it positively as it will benefit the economy. That is, it will benefit the banks. Okay? So, that is how banks create money. through the reserve requirement ratio. So kung yung reserve requirement ratio natin ay 50%, sinabi ko kanina, no? 1 over 50%, the multiplier will only be 2 times. The bank will create twice the amount of money it takes in as deposits. But if the multiplier is lower, say 10%, it can create 10 times, no? Out of the initial deposit. Anyway, so that's how banks create money. Just a summary. When we say banks, the main reason why banks exist is number one, take in deposits. Number two, lend the money to borrowers. Take deposits from those people who have excess funds and then become a lender, lend the money, loan the money to those who need funds. The banks act as a middleman between the lender and the borrower. Okay? Yun yung purpose kung bakit may banks. Yun yung purpose kung bakit may banks. The banks are here in order to take money from those who have excess and give it to those who need it. So interest will be payable by the borrower to the bank and the bank to the lender. Okay? That's the main purpose, no? The capital allocation process. The third function of bank is creating money. Okay? Banks are very powerful institutions. They can create money out of nothing. They can create money out of nothing even without our knowledge. I assume that 90% of you before this discussion, hindi nila alam, no? Hindi nyo alam kung ano ito, no? The vast majority of you. Anyway, I would like to proceed to the main lesson. The main lesson, of course, yung binanggit ko kanina, it's part of the lesson, but the subject is really all about financial statement analysis. Bank financial statement analysis. There are common ratios for banks. So itong mga ratios na to, hindi nyo masyadong alam dahil sa bangko lang ito, no? Sa bangko lang ito. Of course, when you are the manager of a bank, walang kwenta yung mga ratio na inventory turnover. Walang kwenta yung mga ratio na inventory turnover. Dahil ano yung inventory ng bangko? Cash pa rin, di ba? Okay? So the ratios that I have listed here, these are those ratios specifically useful for banks. Okay? Except for return on equity. Because return on equity is useful for any type of company. Okay? Common ratios for banks, you have the return on equity. This is net income over average equity. Net income over average equity. Tinuro ko na to sa recorded lecture. Efficiency ratio, NPL ratio, net charge-off ratio, loans to deposit ratio, capital adequacy ratios. These ratios are specific to banks alone. Efficiency ratio. Efficiency ratio, the formula is non-interest expense divided by interest revenue. Non-interest expense divided by interest revenue. Okay? Next, non-performing loans ratio. Non-performing loans ratio. This is non-performing loans divided by total loans. Net charge-off ratio. Net charge-off over total loans. Loans to deposit ratio. Total loans to total deposits. Capital adequacy ratio. Capital divided by the risk-weighted assets. Okay. As I have told you, these ratios are specific to banks. I'm going to explain what they mean once you already calculated them. So the goal for this night is for you to know how to calculate these ratios. Paano ba i-calculate ang mga ratios na ito? So what I'm going to do first is to give you a sample problem. Then at the end of the session, what we are going to do is to check this together. No? I-check natin to. ng sabay-sabay. Okay, how are you going to answer this? Uh, Write the solution and answer in only one page of a white paper. Any white paper would do. Your notebook, whatever. Any paper would do. So write your solution and answers in a white paper. Take a picture of it. Take a picture of it and then submit it in a discussion board, which I'm going to make public in a short while. Okay? So I'm going to give you 5 to 10 minutes to answer this. 5 to 10 minutes to answer this. Okay lang? Screenshot niya muna. Please take a screenshot first. Okay. Never mind. I'm going to leave this as it is. No? Okay. So you have 5 to 10 minutes. Only one sheet of take a picture of your work, submit it in a discussion board, which I'm going to make public in a short while. 1 minute more. 1 minute more. So please finalize your answers. Submit them. So far, I only see 3 people who submitted. So far, I've only seen 3 people who submitted. You have 1 minute more. 1 minute more.
Sir, saan po sasabihin?
Nandyan sa chat box. Okay, the discussion title is Banks Ratio Calculation. The discussion title is Banks Ratio Calculation.
Sir, it's a discussion tab.
Yeah, discussion feature ng module. The module name is Financial Statement Analysis for Banks. And then under that, you would find a discussion. I'm talking about discussion board, yeah. Discussion board in Canvas. Okay, so 10 pa lang. 10 pa lang yung nag-submit. Okay, so please submit it, whether you're done or not. This is the final call. This is the final 1 minute. Again, this is the last call. So please submit, everyone. Okay, so we are going to discuss together this time. We're going to discuss together this time. Okay, so the first question is the return on equity. The first question is the return on equity. What is the return on equity? It is calculated as net income over average equity. Return on equity, that's ROE, is net income over average equity. How would you arrive at the return on equity is this formula. But what does it mean? It tells us the profits that the bank generated as a percentage of the equity contributed by the shareholders. So how much funds were contributed, or how much funds of the shareholders are being invested in the banks. So return on equity is net income or profits divided by the average equity amount. As a rule in ratio calculations, when we combine income statement account with a balance sheet account, the income statement is already good for the period. No need to change the income statement account. However, the balance sheet account is representative of point in time only. It is representative of a point in time only. So what we need to do is to average beginning and end. Average beginning and end. So what is your answer? Anyone? What is your answer? Anyone? Anyone? What's your answer? Hey, Miss Shi, sorry. You were saying
What's the question, sir?
return on equity.
I'm not sure, but 3.11%.
Okay, again, divide the net income by the average equity. Net income is 560,000. The average equity is, of course, the sum of share capital and retained earnings. In 2017, that's a total of 17M. 2016, a total of 19M, for an average of 18 million. The return on equity is very good, Ms. Shi, 3.11%. Meaning, when we measure the profits as a percentage of the equity investment, the shareholders have an amount of equity an average of 18 million in this bank, 3.11% of that amount would be the size of the profit. Return on equity is a measure of profitability. Return on equity is a measure of profitability. Next question, efficiency ratio. The way we calculate efficiency ratio, as I have discussed a while ago, is non-interest expense divided by interest revenue. May nagtanong, or is it okay if hindi ginawang percent? Yeah. So, sinagot mo 0.0311. Okay, 0.0311. 3.11%, it doesn't matter. Okay, 3.11% or 0.0311. Okay, going back in efficiency ratio, the way we calculate efficiency ratio is non-interest expense over the interest revenue. Over the interest revenue. So, what does the efficiency ratio measure? Gusto kong i-imagine nyo. Imagine nyo yung operations ng bangko. Para makapag-operate kayo ng bangko, kailangan nyo ng pasahod sa mga teller, sa mga security guard. In order to operate a bank, you need to pay for people like tellers, bank managers, support staff, security, etc., utilities, etc. All of those expenses are said to be non-interest expense or other operating expenses. The expenses needed to operate the banks, they are called other operating expenses or non-interest expense. Do we really need them? Of course, we need to pay for them. But for every peso, okay, for every peso that we pay for them, every peso that we pay for these expenses, it should at least provide interest income to the bank. Now, the efficiency ratio, the lower the ratio, the better, because the expense is in the numerator and revenue is in the denominator. The 300,000 pesos other operating expenses, this is 300,000 pesos, provides an interest revenue of 1.8 million pesos. It provides an interest revenue of 1.8 million pesos. 300,000 non-interest expenses, the amounts that we pay for the salary of the security, the tellers, the utilities expense, 300,000. These banks, they generate an interest income of 1.8 million. The branches of Simple Bank generates a total of 1.8 million. So as a percentage of the revenue coming from interest income, this non-interest expense is 16.67%. Again, as I have told you, this is non-interest expense over interest revenue. The lower the ratio, the more efficient the bank is. Nasusulit ba yung pambayad sa security tsaka teller? Nasusulit ba yun sa pambayad ng aircon, sa pambayad ng kuryente, tubig, para dun sa bangko? Nasusulit ba? Efficiency ratio would give an answer. For these expenses, okay, it constitutes what percent of the interest income? Our answer is 16.67%. The lower the efficiency ratio, the better. The lower the efficiency ratio, the better. Okay, those who already submitted will have full credit. Okay, will have full credit. We are running out of time. So, we're running, meron pa palang 6 minutes. So, any questions pala? Any questions pertaining to the efficiency ratio? Okay, wala na. So, okay lang. I'm not checking the correctness at the moment. Kapag quiz, dapat tumama kayo, no? I forgot to mention my rule. During examinations, quizzes, long exams, we must get the correct answer. For exercises and activities, it's okay not to get it correctly. You still have full credit. Okay? So I'm going to end the discussion here. I'm going to end the discussion here. So thank you for listening, and I hope you learned a lot today, no? Especially our first day with banks. Again, thank you, and enjoy the rest of the night.